and welcome to Business Today Television. I'm Siddharth Zarabi, and with me today is top market guru Saurabh Mukherjea, founder and CIO of Marcellus Investment Managers. Welcome to this episode of Market Masters, Saurabh. We are speaking at a time when the elections, the post-election scenario seems to have settled down, and so have the markets to some extent. What's the immediate outlook post-elections that you would like to describe for the market?
Look, so that the outlook post-elections is what it was pre-elections. I don't think the elections are a massive event for the market. As we saw, the elections create a lot of drama and lots of business for stockbrokers. But from a long-term investor's perspective, I think the election was a look-through event. The outlook for the market is that the economy is in good shape. Corporate India's balance sheets have the lowest level of debt equity that they've had in a generation. The banking system has a higher tier 1 ratios than it's ever had. In fact, India's banking system is the highest tier 1 ratio anywhere in the world. Large cap valuations, especially high quality large cap valuations are undemanding. And the small cap part of the market is worrisome. It was worrisome before the elections, and the small cap part of the market, I believe, valuations remain worrisome after the election. So if you are watching this program and you're trying to figure out should you invest in the Indian stock market now, my suggestion will be yes, you should, provided you focus on the large cap end of the market, where I believe valuations are sensible. Small and mid caps are looking at being invested.
Okay, so since you spoke about that, what are you likely to prefer now in this environment? And added to that, do you think the uncertainty is over, or a little bit more still needs to be factored in?
Well, the nature of equity investing is we are investing in companies who will make money tomorrow. That will always be an uncertain prospect. It's got nothing to do with the political situation in the country. In any economy, what profits our investee companies will deliver next year, there will be a zone of uncertainty. That being said, if I look at high quality large caps in India, companies with compounding profits at around 20% for more than a generation, I don't think the quotient of uncertainty associated with their profits is particularly high. And many of these cases, in cases of many large cap, high quality companies, valuations are at decadal lows. To my mind, those are bargains that discerning investors will like, whether they're discerning Indian investors, discerning foreign investors. My reading is they will go for high quality large caps over the coming few months.
Okay, high quality large caps over the coming few months. Saurabh, you saw what happened in the immediate aftermath of the results. We've seen this shift of sorts in the market away from PSUs, PSU banks, defense, and we now seem to be having a defensive play, including FMCG, IT, utilities, healthcare. Do you agree with that shift that you are witnessing in the market, and is this going to remain so for some time?
Look, I honestly don't know. I appreciate what you're pointing towards, Siddharth, and I agree that it is taking place. There was a bit of a frenzy associated with PSUs for the last couple of years. I couldn't quite understand the frenzy. We haven't invested in any PSUs. It goes against house style for Marcellus to pursue investing in PSU stocks. But I appreciate what you're pointing to. A lot of investors took to PSUs very aggressively over the last couple of years. And for all I know, maybe they'll take PSU investing again over the next couple of years. I appreciate what you're pointing to, but in the last couple of weeks, it's debated somewhat. That might be because of uncertainty to do with the coalition government. As the government has got created, it looks increasingly clear that there's a great deal of continuity in their policies. Perhaps the PSU rally will begin once again. We haven't invested in PSUs in the past. We don't intend to invest in PSUs in the future. Many of the consumer stocks that have rallied in the last couple of weeks are a large part of our portfolio, and understandably, therefore, our portfolio has risen very appreciably over the last couple of weeks, significantly more than the market.
In terms of the overall portfolio that you have, Where is the largest chunk of your capital currently allocated, Saurabh?
So our largest portfolios are our flagship portfolio consistent compounders. So consistent compounder has 16 stocks in it. The market cap is around 40 billion, $45 billion. These are large, chunky companies such as Asian Paints, HDFC Bank, Bajaj Finance, Divi's Lab. And as I'm sure your viewers will be familiar with these names. These companies have compounded profits at a steady rate over many years. But in the last 3 to 4 years, their share prices have gone nowhere. As a result, in several of these cases, these companies are available at decadal lows. So, for example, HDFC Bank, I think, is available at 12 times forward. And we've obviously backed up the truck into companies like, say, Asian Paints, you're flashing on the screen. We have backed up the truck into companies like HDFC Bank, Asian Paints, Divi's Lab, Bajaj Finance, because it's not too often that you'll get companies of this quality, 20% plus profit compounders trading at deliciously low valuations, and we've decided to capitalize as much as possible. We did that. We made that call a long time back, around 7, 8 months back. And in the last 2 weeks, that allocation has borne fruit. I think this month alone, we are up 7% on in our flagship product, which is a predominantly large cap.
Okay. I just want to pick up on Asian Paints and a broader question. One of the first announcements of the government was 30 million more affordable homes under a scheme for that purpose. Now the ticket size is very low. I wonder whether high quality stocks like Asian Paints stand to benefit from that kind of a focus, where the government has consistently been trying to uplift rural housing, but has not succeeded too much as far as affordable housing is concerned in the private sector. The market is being driven by premium upper end housing. Is there anything additional for a company like Asian Paints with this kind of a policy focus, Saurabh?
The policy focus, Siddharth, is not really particularly material in the context of our country. We are the world's fifth largest economy, and government spending accounts for barely 15% of GDP. Right? So, as is the case in any free market economy, the private sector ka kharcha, households ka kharcha makes up 85% of the spending construct. And in that context, as I'm sure you'll be aware, we have a roaring real estate boom in our country. The 50, 60, 70 lakhs ticket size flat is flying off the shelves of developers like DLF, Godrej, Shobha developers, and so on. And all the building material companies stand to benefit from that. There is a cement company, a paint company, sanitary ware company, plywood company. Therefore, across our portfolios, across large cap, small cap, and mid cap, we've loaded up on high quality building material companies, whether it's an Asian Paints, whether it's a Pidilite, an Astral Poly in our flagship portfolio alone. Pidilite, Asian Paints, Astral Poly feature. So one of the things I keep telling my clients is, beyond the point, please don't obsess about Sarkar kya kar rahi hai, because this is a free market economy. A free market economy mein, if you don't understand economy mein kya ho raha hai, and your focus is Sarkar kya kar rahi hai, then it's a kind of very 80s mindset. You're still lost in the socialist era, jahan pe license raj ka mahol tha.
Okay, that's a very interesting set of numbers also that you have reiterated. I come back to some of your the stock picks, the names that you mentioned. Since you spoke about HDFC, I wonder whether you also have a view on ICICI that you can share with our viewers.
So we don't have ICICI in our flagship portfolio. We have a financial services portfolio where ICICI Bank has a place as well. I think, as is well understood, so that under Bakshi Saab, under Sandeep Bakshi Saab, ICICI Bank has in the last 5-6 years posted sparkling numbers. We think it's well placed to continue benefiting from the ongoing strength in the recovery. As I pointed out, corporate India's balance sheet, India Inc.'s balance sheet, has the lowest leverage in 20 years. And therefore, as we get into this NDA government's life, as private sector capex accelerates, I'm sure a lender like ICICI Bank, which has a large commercial and SME book, will be able to participate in the private sector capex recovery. So it's a significant part. It's a large part of our Kings of Capital portfolio, and we look forward to compounding our wealth further with ICICI Bank. In our flagship portfolio, HDFC Bank is actually the largest holding.
As far as private sector capex is concerned, our viewers would probably like to hear your thoughts in a little bit more detail. Where do you see that recovery, and what sectors and companies are well positioned to lead that?
So I think it's most prominent in southern India. So we've been visiting cities like Coimbatore, Hosur, the area around Chennai. We've been visiting it for a long time. I've lived in India for 16 years, and I've visited those parts of the country for a long time. I haven't seen this sort of frenetic private sector boom in these cities of southern India, whether it's the area around Hyderabad, the area around Chennai, the area around Bangalore, or around Coimbatore. It's a frenetic private sector capex boom, driven by, say, the development of the entire ecosystem for making iPhones, the development of the pharma chemical cluster in Hyderabad, and the development of the auto ecosystem, right? Both two-wheeler and four-wheeler ecosystem around Chennai. Next up, I would say Gujarat. I think cities like Rajkot, Surat, Baroda, they're also seeing a handsome recovery in private sector capex around light industrial manufacturing, around chemicals and pharmaceuticals. I think these two clusters, South India, uh, uh, Gujarat, and I guess you can also include the Bombay, Mumbai, Nashik, Pune triangle, right? This is where it's very evident. New factories are coming up. Both Indian companies are increasing their capex. For example, Asian Paints set up a giant plant in Vizag. The largest plant in Vizag was set up, I think, 2 or 3 years ago. Similarly, the iPhone ecosystem has been obviously sponsored by Apple, and I think there's more foreign investment heading towards Gujarat and towards southern India. So I think a year into the private sector capex recovery, it's clearly accelerating. And in our flagship portfolio, we've got Tube Investments to benefit from that. Tube, as I'm sure many people know, owns 58% of CG Power, supports Tube through its EV initiatives, through its EV three-wheeler and truck initiatives, and through Tube's CG Power investment to benefit quite nicely from the incipient recovery in private sector capex.
Saurabh, since we spoke about HDFC, ICICI Bank, any thoughts on the public sector banking space? Because the broader theme of the most recent results continuing to drive home the fact that the NPA crisis and the burden that it had cast on them is over. Those stocks have also sort of gone up and down a bit. The Nifty PSU Bank Index, in fact, closing just marginally up today. Do you have a view on this as well?
I think the private sector banks have done spectacularly well in the last 4 years. Basically, from the height of the COVID crisis to now, many of the PSU banks are up 3 to 4x. And as you're rightly pointing out, that their numbers are sparkling. We don't invest in the public sector banks because, as our view is, the public sector banks are there to serve the country, there to serve the needs of the nation, especially the needs of underprivileged borrowers, farmers, SMEs who struggle to get credit elsewhere. And because the PSU banks' primary focus is on serving the nation, we as for-profit private sector shareholders prefer to focus on the private sector.
Okay, Saurabh, we'll just slip into a quick break and come back. Viewers, do stay tuned in as we slip into a very short break.
This is an India Today exclusive. I'm being joined by the Prime Minister of Bhutan, Prime Minister Tshering Tobgay. A unique, important relationship, historical, that India and Bhutan share. You here for the oath-taking ceremony. Expectations from Modi 3.0. What are the expectations in terms of bilateral relations?
I'm honored to be here. I was here in 2014 for Prime Minister Modi's first oath-taking ceremony, and I'm back here, honored to represent my king and our people at this very momentous occasion. I come with no expectations. I've come here as a friend.
Welcome back to Market Masters. I have with me Saurabh Mukherjea, founder and CIO of Marcellus Investment Managers. Saurabh, I was recently reading about the three new stocks that you had picked up, and among those was City Union Bank, Tube Investments, and Narayan Hrudayalaya. Your views on them since some time, almost a quarter has passed since then, and are there any other new picks that you have considered?
So look, just quickly on them. So City Union Bank, I've known the bank for a long time. I've been in India for 16 years. I've known UBK and Dr. Kamakodi for the bulk of that time. We as a team have understood for a long time that their franchise in Tamil Nadu, in Andhra and Telangana, their franchise in that part of the world, very prosperous part of the world. Their franchise is second to none. They have incredibly loyal customers on both sides of the balance sheet. And therefore, after a few unfortunate episodes in 2022 and 23, when the stock went down to 1 times book value, it went down to 1 times price to book. We thought it was a bargain to be had. So we went to Coimbatore, we went to Tamil Nadu, traveled around the interiors, met not just City Union bankers, but we also met bankers from Kotak Bank, ICICI Bank, and figured out that City Union Bank's franchise is tip-top. Franchise is holding on nicely, but the market has punished it for a bunch of unfortunate events, which we think were episodic. And hence we ended up on City Union, I think 5 or 6 months ago, and it's worked out nicely for us since then. We hope to be able to make more money on this in the years to come. I think fair value for City Union will be somewhere around 2 times price to book. So long way to go on this company. Hopefully we'll be able to make at least 100% return on this over a 3-4 year period. Narayan Hrudayalaya is the preeminent hospital chain in Bangalore and in Kolkata. Again, as our take on India is as we get older, richer, sicker, as more Indians buy health cover insurance, as more and more Indians buy, either they get corporate health cover from their employers or they buy health insurance themselves. Private sector hospitals will see a rise in their business. Amongst the various listed private sector hospital chains, we believe this is the one with the strongest moat around looking after patients, generating a decent ROC, reinvesting that ROC in the booming markets of Bangalore and Kolkata, and compounding wealth for us.
And also a very good personal brand for the promoter. I don't know if that feeds into valuation, Saurabh, but very clearly that brand, the brand of the person who leads it must be amongst the most powerful individual brands in the country, Saurabh.
Yes, so I think that's a good point you make, Siddharth. So we spoke to a lot of people in the healthcare industry, both in government and in the private sector healthcare industry. And one point of view we developed was, if you're going to invest in a hospital chain, it should be run by a doctor, right? A hospital chain run by a character like me is going to be trickier, right? Because if you give someone like me the chance to run a hospital chain, I'll start looking at things like return on capital and paisa kitna bana hai. Whereas a doctor, especially a doctor with a reputation to protect, will not just attract patients, clientele, but also he will make the right medical decisions, which are good for the franchise's long-term future. So that's Narayan Hrudayalaya. Tube Investments, 2 parts of the investment, as we were discussing a few minutes ago. There is a capex recovery in our country. In many different ways. CG Power, which Tube owns 58% on, should benefit from that capex recovery. Secondly, Tube has an engineering division which supplies the auto industry, which supplies the manufacturing sector, makes steel tubes and various auto anchs, fine blanked parts. That should be a natural play again on a light industrials recovery, especially in South India. And the final and perhaps the most understood aspect of Tube, the EV businesses that they have seeded, three-wheelers, trucks, and tractors. We believe all three of them have the potential to become multi-billion-dollar franchises. And therefore, if you put the totality together, CG Power, engineering, auto anch, and the EV businesses, we think it's a very powerful play on a capex recovery in India.
Saurabh, before you go on to sharing any other newer stocks that seem to be on the horizon for you, I just wanted to add to that healthcare point that if you look at the United States, there's a lot of pushback now with private equity taking over several hospital chains and gutting healthcare in the process. Not from a stock point of view, but to establish this point further, I also know of an unlisted group in Delhi which is rapidly expanding, and for some of our viewers it would be quite familiar. It's the same group that sold its education business to Byju's. This is Akash Healthcare, and I've seen some of the expansion that they have been undergoing, and again a doctor who himself does dozens of surgeries every day leads that. So that's a very, very important point that you made, Saurabh. But coming back, what is interesting you on the horizon that you may have not yet taken a bite at but are considering?
So look, I think before the elections, we had an inkling that post-elections, there will be a lot of focus on an agri revival, a rural revival. And therefore, in a couple of months prior to the elections, we traveled across rural India, both in the south and in the north and in the west. And we finally settled upon Godrej Agrovet. Godrej Agrovet as our preferred play on rural India and the efforts to revive, both the governmental efforts to revive rural India and in a way a natural economic revival in rural India on the back of the after effects of COVID fading away, a good monsoon kicking in. So Godrej Agrovet has a dairy business, but their largest interests are in crop protection, herbicides, fungicides, and they have an oil palm business where they incentivize farmers to grow oil palm, and then they crush the oil palm to produce palm oil, and then they sell that to the hotels, restaurants, FMCG industry. So Godrej Agrovet, crop protection, oil palm, an animal feed business, animal feed for cattle, for fish. So it's a booming business. We think the market cap valuation should double over the next 3 years or so. Highly cash generative, flourishing franchise with different bits to it. All of the bits, whether it's the dairy business, the animal feed business, the oil palm business, or the crop protection business, all the bits are a play on a sustained rural revival, which we think is highly likely to be engineered by a combination of government and free market forces over the next couple of years.
Okay, I've spoken to the management and even at Davos recently. Saurabh, the realignment of the group that was in the headlines recently, just a sort of macro question on this. How do you think it will play out? Any concerns there as far as individual companies in the Godrej pack are concerned?
No, look, I mean, if you ask me in the context of Godrej Agrovet, anyway, it was owned predominantly by the Nadir Godrej side of the family. I think there's a minor realignment there, but I think the bigger benefit could be that the promoters, the Godrej family, were trying to sort out the family bifurcation in property, and perhaps that might have taken away some of their bandwidth in the preceding years. But with that distraction out of the way, hopefully the promoters are even more focused on generating value out of Godrej Agrovet. I think it's a glittering asset. I think they can compound their wealth manifold. Remember, the promoters own 75% of this. So minority shareholders like me can make some money, but the real wealth here is potentially to be generated by by the promoter family, they could potentially grow their wealth by $1 billion over the next 3 years.
Okay. Let's come back to the agri theme. And we've seen one of the most experienced political administrators with a track record of almost 15-20 years in the state of Madhya Pradesh. That is Shivraj Singh Chauhan getting agriculture and rural development. And many viewers would perhaps appreciate the point that along with the highway development program, which is a separate ministry under Nitin Gadkari, there is also a rural roads program, Gramin Sadak Yojana, which comes under rural development. So Mr. Shivraj Singh Chauhan has the entire agri budget as well as the rural development budget to play around. I wonder if you would have any thoughts on a possible positive impact of clearly a very experienced person now at the helm in Krishi Mantralaya.
No, I think it's a good development. We think that this is likely to lead to positive development. So when he was Chief Minister of MP, Shivraj Singh Chauhan ji expedited several novel schemes to bring in the free market in uplifting the farmer's position. So, for example, bringing in the free market to buy straight at the farm gate at free market prices, but with the state government providing a floor. Something very similar has worked very nicely, Godrej Agrovet, in palm oil, in oil palm. And we'll wait and watch. But my hope is that given this very experienced politician's track record of generating novel schemes for rural India at the state level, I'm hoping he will translate that to the center level and thereby uplift the fortunes of rural India, which will have a spillover benefit for Godrej Agrovet.
Saurabh, are you invested in any IT stocks? And if you are, can you explain to our viewers what seems to have changed apart from the defensive play in the last 7-10 days? Is fundamentally the outlook better than it was like a quarter or 2 quarters ago for our IT companies?
So look, we are invested in LTTS, which is an engineering R&D company we've been invested in for a long time. We've increased our position in recent weeks. There's also another large position we're building in IT because it's a position that's underway. I don't want to talk about it. Why are we building the position? Why are IT stocks going up? I think a couple of things. Firstly, in the context of the boom in the Western world in AI and cloud, as you would have seen in this last several quarters, Fortune 500 companies have no choice but to hire Indian IT firms for cloud projects and AI projects. You can't do the AI piece without doing the cloud piece. And 70% of the Fortune 500 hasn't yet done the cloud piece, which means they have to go through this. Secondly, the US economy is in fine fettle. The economy is booming. American companies, especially larger companies, have booming profits. And therefore, I think it's a matter of time before the bulging order books. The order books of the Indian IT services firms are at record levels. I think it's a matter of few quarters before that translates into bumper revenues and profits. My colleagues and I can't time that. We know the order books are bulging. That's announced. We know the US is booming. We know the Americans have to move to cloud. So, agar sare sitare asman mein dikh rahe hain, so we move forward and load up on these companies rather than waiting for them to say that they've declared a 25% YOY jump in.
How long do you think the real estate theme will continue to play out in the manner it is?
In India, you're referring to the Indian market, Siddharth?
Yes.
So look, we haven't yet begun the rate cutting cycle. I suspect the RBI will begin the rate cutting cycle towards the end of this calendar year. The rate cutting cycle will be the next fillip. And if we go through a couple of years of rate cuts, which I suspect is the most likely duration, we've got at least 2 years of life left in the real estate cycle from that perspective.
Okay, that's an important point, and precisely because that business is cyclical in nature, several people asking questions of that. Saurabh, there's so much more to discuss, but one quick final question as we run out of time. How significant will the upcoming budget be, and what would you tell the newer investors in the market? And now there's a very sizable number of them, Saurabh, who try their hand at direct equity investing. Is the budget going to be just another day or a pivotal moment for the direction of our markets?
I think by and large, the FM gave a fairly clear indication in her vote on account in February as to what direction she was going to go in. With the elections out of the way, there will be a constituency which will try to assess whether the BJP is turning populist or not. I don't think they will turn populist. I haven't seen the BJP present populist budgets. And even if I go back to the NDA, the previous NDA administration, I don't recall them presenting.
And they didn't do it. They didn't do it even in this recent interim budget when there was perhaps a need from a political point of view, Saurabh.
That's right. So to the extent that there is a constituency waiting and watching to see whether the BJP presents a populist budget, they'll be very interested. My view is it's going to be a business as usual budget, where they try to address the constituencies who drive votes, and especially I'm sure they'll have one eye on the upcoming assembly elections in Maharashtra, Haryana, and Jharkhand. But beyond that, I think it'll be a business as usual budget, and my reading is it will soothe the nerves of those poor folks who are rattled by the coalition and who pushed up the 10-year bond yield higher. So beyond that constituency, sort of having to take a fewer paracetamols. Beyond that constituency, having to take fewer headache pills, I don't think there's that much else to worry about. This should be a business as usual budget from an NDA perspective.
Saurabh, as always, it's been a pleasure speaking with you because the clarity of your thought with regard to stock picking, very rare to hear that in the market, and I thank you for sparing the time with us today. Viewers, with that, it's a wrap on today's episode of Market Masters with Saurabh Mukherjea. We'll be back with more. Until then, goodbye.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show.